Yeah, well, of course, Nike really tapped into this. Of course, overall, as a company, its latest earnings report, this is for its fiscal first quarter. Actually, unfortunately, missing Wall Street estimates here. Sales were up about 12% here. That's a little lighter than what the street was looking for. Earnings were up at about $1.16 a share here. But the forecast going forward, it really seems all to be tied right now, Caroline and Taylor, to the idea of what's going on with their supply chain.
Yeah.
This isn't really a demand story. People want to buy this stuff. The
Correct.
question is, can you get it here, and can you get it here at a reasonable cost?
And I think you were so smart to point out the big drop in inventories, which is typically a good thing given that consumer demand that Nike has. But unfortunately, it's the replenishing of that isn't happening as quickly as maybe it once was. Let's discuss all of this with Poonam Goyal, of course, of Bloomberg Intelligence. And Poonam, give us sort of your first take on what you make of these numbers.
I think you said it just right. It's all about the inventory. I mean, demand clearly is very high. We saw the North America and the EMEA revenue miss, and my suspect is that that's due to not having enough inventory because the demand here has been pretty strong over the quarter and all year, really. So we think the inventory that's in transit, I mean, that's the key question. How much inventory is in transit? And is it enough to meet holiday demand? Because we do still see supply chain hiccups, whether it's through transportation or from the prolonged shutdowns that we had in Vietnam, where Nike manufactures over 40% of its goods.
And has to ship them from there, Poonam. And one of the other key lines was that the costs are rising. They didn't make too much of an issue of labour shortages. For them, it's freight costs. And how is this an ongoing concern, even if they're able to manage to manufacture over in Vietnam, then getting it here and getting it not just on a ship, but having to fly it?
Yeah, I mean, those costs are rising. We saw in their gross margins, which are actually up, which is encouraging. But if you just look back, you know, the Drury, Hong Kong, Los Angeles container rates are at a record high. They're close to $8,000 per 40-foot container, and that's the highest they've been ever. So freight costs aren't coming down, at least through holiday, we don't think. And they will pay the higher costs because they need to have inventory in stores. The question is, can they get containers to get the added inventory here in time?
So, I mean, a lot of people are going to focus, I guess, on some of these short-term issues, Poonam. A little bit later in the show, we're going to focus on how a lot of these companies are sort of finding new ways, I guess, to sell to the consumer. Nike has done a pretty good job, at least in the past, with regards to shifting a little bit more towards a direct-to-consumer model, or at least some sort of hybrid approach here. The idea that you don't need the middleman as much as you used to. Is that model still working for them in this environment?
Absolutely. In fact, Nike was one of my first retailers to say that they want half of their sales at some point in time to be digital, which is huge for a company the size of Nike with over $40 billion in sales. And even in the quarter, they reported strong digital sales up about 29%. So we think Nike is absolutely moving forward to capture that digital audience, which is where the consumer is shifting. They will have stores. Their stores will be more experiential, but they will play with the app and the customer experience that they have through sneakers, on the sneakers app, and et cetera, to get them the digital gains that they plan for to reach half sales.